Welcome to this demonstration of our 24/25 Taxpert Incorporation app. And this app is designed to help you advise clients who are thinking of converting their sole trade into a limited company. And of course, in past years, there were many situations in which it would have been advantageous to incorporate for tax purposes. We must never let the tax tail wag the commercial dog. But recent changes, in particular to national insurance contributions, have meant that the advantages have really, in many cases, turned into disadvantages. And this app may be quite useful in explaining to clients who want to incorporate, possibly for other reasons, that there will be a cost to converting to a limited company. Now, the app is very simple to operate. On this screen, we just have one input screen. You can put in the trading profits. Let's suppose we've got a very successful sole trader who's generating trading profits of 250,000. Well, straight away, the app calculates the Class 4 national insurance and the tax liability and shows the net income that would be £145,040. It is possible to input other earnings, other non-savings income, particularly property income, gross interest, and other dividends that the taxpayer might enjoy. But for the time being, I won't put any of that in. If I now look at the right-hand side, I can see that the trading profits, and the right-hand side deals with the limited company option. The trading profits have already been picked up from the left, and no salary or interest or dividends have been entered. I could enter those manually. But what I would normally do first is click this button up here, Optimize. And as with our profit extraction app, this will work its magic and tell us what the optimum combination of salary and dividend is, and also what the net income would be if they were to incorporate. And in this case, the optimum salary would be 9,100, and the net income would, in fact, because of tax on the dividends largely, and this app assumes in the optimization version that we extract all of the distributable profit by way of dividend. But we then work out the salary, tax on that, there'd be no NI at that level, and then tax on the dividend. And we see that the net income, instead of being 145,000 for the sole trader, has dropped to 130,000. We're actually worse off by over £14,000. Would it make much difference if you were a Scottish taxpayer? Well, of course, for 24/5, we've got far more complicated Scottish tax rates, 6 bands now, and that will mean that for non-savings income, there would be a big difference. Now, before I click the I button to go Scottish, if they're a sole trader, the 250,000 will be subject to those higher Scottish tax rates. But if they're trading through a company and only take a low salary, the dividends are not subject to the higher Scottish tax rate. So let's now switch to Scottish, and straight away we can see that the cost of incorporation has fallen dramatically. It was 14,400 odd. It's now only 5,400 odd for the reasons that I've given. But of course, many traders wanting to incorporate, particularly at this level, would not be wanting to extract all of the profit, distributable profit, by way of dividend. And it could be that they only want to extract, let's say, 80,000 by way of dividend, and the rest of it they will retain. And on that basis, because the retained profit is not, and I'm just toggling to other sheets, the retained profit is not immediately subject to tax, then their saving from incorporation is actually 37,000. But that's when we look down here and we take into account not just the individual's net income, but their personal net income with the retained profit from the company. So that would be 173,000 odd, and that is significantly more than if they were a sole trade and the whole of the profits were subject to tax. So let's not forget that incorporating, where we're using the company to shelter profits by not taking all of the distributable as dividend can be a very sensible option. Well, as with all of our apps, we've got workings in full for the sole trader. You can see how the tax is calculated in the NI, and workings for the company as well. And it's very flexible. I can reset everything to 0 just by clicking on that, start again for this or another client, and click directly to the workings. And as you can see, the usual options for state pension age and for Scottish taxpayer. Oh, one further point I would make is that we now have to identify associated companies. Let me just put some figures back in. If I put in the 250,000, then the corporation tax would be 62,500 on the right here if there are no associated companies. But if the individual has an interest in other companies, or for some reason the new company would be associated with other companies, let's say there would be 2 other companies, then the corporation tax, instead of 62,500, would still be 62,500. So that just reminds me that at that level of profit, in fact, it'll make no difference. If I were to drop the profit to 100,000, then the corporation tax, that's only 10,000, so that's not helpful. We'll go back to 100,000. The corporation tax on that is 25,000, but that's with 2 associates. If I have no associates, then the corporation tax would only be 22,750. So it obviously depends on the level of profit and the number of associated companies, but that's built in to the app.